Hello everyone, today's video is sponsored by the $1,400 stimulus checks that you guys are about to get. So picture this, you're sitting at home, stimmy in hand, your Fidelity is starting to look like a snack. You are scrolling through different stocks and you can't decide what to buy. You're swiping left because this one's too expensive, you're swiping left because the numbers don't look right on this other one, you don't think it's a good time to buy in on this stock, and you just can't decide what you want to buy. So, with the theme of not knowing what we want and playing the field, what we're going to do is we are going to look at Bumble. We're going to see if Bumble is going to message us first and if it's a good investment at its current price point. Bumble is currently trading at $69 per share. It literally IPO'd weeks ago, back in February 11th, and it started at $74 per share. And you can see here on the price chart, it's kind of gone up and down since then. It's currently trading at 69. And what we're going to do is we are going to dig into Bumble's numbers and we're going to try to figure out, is this a company that we like long term and we want to invest in long term, or should we sit this one out and keep swiping until we find a better option? Alright, so first things first, before we dig into the numbers or anything, we just have to level set real quick that Bumble, the overall company, is actually made up of two apps. Bumble app, which you know and love, that's the one where women message first. And then there's another app called Badoo, and this is actually one of the oldest dating apps in existence. It started back in 2006. So one thing you'll start seeing as we go through the numbers is that Bumble actually breaks out their revenue by what came in from the Bumble app and what came in from the Badoo app. Just something to keep in mind. I like to know how my companies make money, or how my stocks make money, I should say. So knowing about Badoo is an important step to knowing how that works. Alright, the next thing we're going to do is we're going to actually just look at the dating app market as a whole to see where Bumble and Badoo fit into that whole market. So as we can see here, the total dating app revenue is increasing year over year, which is good to see. The total amount of dating app users are also increasing year over year, which is good to see. We will of course follow up on these trends and see if they match up with Bumble's numbers, and they do, spoiler. But anyway, so market share, this is really important. How much of the market is actually occupied by each of these apps? So we can see Tinder is king. Badoo, while you might never you might have never heard of it because it's really mainly big in Europe and South America, actually has really big market share across the world, just not so much in the US, where it's not really popular at all. As we can see here, so Tinder has a huge amount of market share. Bumble is actually one of the biggest as well, so that's a good sign, and it's growing, which we'll see later on. So this is the US dating app market share, which I was just telling you about. Bumble is second to Tinder. Badoo is non-existent here. You got Match, you got Plenty of Fish, you got Grindr, so no Badoo in the US. It looks like the company strategy is Bumble in the US, Badoo abroad, and it seems to work pretty well. And then in terms of valuations, again, Bumble and Tinder are way higher than most of the other competitors. Of course, Badoo is part of that, so that's good to keep in mind as well. And finally, global dating app projected revenue, it's anticipated to keep growing, which is a good sign. This is an industry where the users are growing, the revenue's growing, and in general, it's growing. So off the top right there, that is a good thing for Bumble. And now let's actually get into how Bumble's doing with its paying users. So the way it works is Bumble mainly tracks their paying users. So Bumble, of course, has a lot of people on its app, but not all of them actually pay money, which is a very important distinction to understand, okay? Because we are going to look at their financials here. We want to know who is going to pay money. So how does Bumble actually charge people for using their app? They have two methods, Bumble Boost and Bumble Premium. So what Bumble Boost is, it's a deluxe feature where you can see everyone who's right swiped you, so people who have liked you on the app. You can have a longer time where they can message you or you can message them for, and you can rematch with people who you might not have gotten to in terms of messaging. And then Bumble Boost, of course, has a few other features that I won't call out. And then Bumble Premium. So Bumble Premium also has a few additional features that you wouldn't get with just basic out-of-the-box Bumble. It's really important to know that that's how Bumble monetizes its app. Badoo also has its own premium subscription. It's called Badoo Premium, and it's a subscription service that basically lets you see many of the things that you would see on Bumble or Tinder Premium, where, who liked you puts you at the top of the line, those kind of things that you wouldn't get with out of the box Badoo or Bumble, Tinder, whichever one you're looking at. In this case, but so that's basically how the dating app monetization works. And now that we know that, let's actually look at Bumble's paying users. So as you can see here, Bumble's total paying users increased by 22%, which is freaking awesome, 2.5 million. And their average revenue per paying user, that's what that means, was $18.89. So it's slightly decreased, not enough to set off any alarms, but just something to keep in mind is as their paying users are increasing, they're not keeping as many of them, which is why that number is slightly down. And important to point out, these numbers are actually across both Badoo and Bumble. Right here, you can actually see the breakout for both Badoo and Bumble for Q4 of 2020 versus 2019. So as you can see, this is in thousands. So what that means is Bumble's paying app users were 1.2 million versus 890 last year. It's awesome. That's a big increase. Badoo, on the other hand, also had an increase of 300 million, and total paying users rose to about 2.6 million. So what you can see here, these numbers don't match up perfectly with what we saw above. They didn't give the full breakdown for the year ended 2020, which is why these numbers look a little bit off. But as you can see, they actually did a little bit better in Q4 of 2020 than they did overall in the year. They ended at 19.82 average revenue per paying user on the year, but they actually improved that a little bit in Q4. Wonder if it's because people were, lonely in the holidays or more likely to pay for Bumble. They don't really talk about their seasonality, but I wonder if that's the case. What I will say is the Bumble app generates much more average revenue per user than the Badoo app. That's something to keep in mind right there. Now that we've looked at how Bumble as a whole makes money, what we're going to do is we're actually going to look at Bumble's financials and see how they did in terms of making money as a whole. So the first thing we're going to look at is the income statement. What we see is Bumble's revenue actually increased by 19% year over year. That's really good. However, their expenses also increased. Their cost of revenue, the cost of doing business, increased by 12%. They paid more money in sales and marketing. Their general and administrative was up quite a bit this year. They don't really specify why, but that will definitely be a number to watch in the future to see what's going on with their general and administrative expenses. Product development, so they do pride themselves on putting a lot of money into their product development because they think that's how you stay competitive in this space. Dating apps, there's a lot of them out there. It's a very competitive market, so you do have to put a lot of money and resources into product development and R&D to make sure that you're staying ahead of the game. So that increased by 30%, but that is not an expense that I frown upon. As long as they continue to innovate, that can help them compete in the long run. I like that. Depreciation and amortization, so that was up big, but that is an accounting number. And so what I did here in the EBITDA was I actually took their revenue minus expenses and took out the depreciation and amortization, which we'll talk about in a bit because that'll become important when we talk about the net loss that Bumble incurred. For the year ended 2020, they incurred a net loss of $105 million compared to a net gain of $93 million the year prior. And a lot of that was due to the depreciation and amortization accounting measure that they put in. So when you take that out, it's really only negative 13 million, which while still a net loss is not as bad. All right, balance sheet. So what we're going to look at here first is the current assets and current liabilities. You know I love to look at this. If you guys don't know, current assets are anything that's accessible within a year. Same thing with current liabilities, anything you owe within a year. So current asset to current liability, it's called the current ratio. That measures if you could pay off all of your current debts with all of your current assets. You like that number to be a ratio greater than 1. And for the year ended 2020, they were 1.04. So just over that 1. The year before they were 1.4, so I don't like that they decreased their current ratio. However, it is good to see that their total current assets did increase by 47%. So they are increasing, but they're bringing on more debt as they're generating more money, which you don't like. Their total cash increased by 122%. That's really good. And we'll talk about that when we go to the statement of cash flows. You'll see where a lot of that cash came from. And finally, stockholder equity. So so you look at stockholder equity on the face of it. Okay, if someone just gave you the stockholder equity, you're like, oh my God, 6,900% increase year over year. They are killing it. This is why isn't everyone, they are generating so much revenue for their company. Why is not everyone buying Bumble stock? Well, it's an accounting measure. When you look into Goodwill and intangible assets, and you can see here I have my Goodwill Investopedia open. Goodwill is an intangible asset that basically looks at, okay, you purchased a company for higher than its net fair value, so you overpaid for it. You take the difference of what you overpaid, and that's goodwill. It's nothing. It means nothing. It's just an accounting number. It doesn't matter for real life. Intangible assets is similar, so that's like the Bumble brand. You know, the whole like women message first, the cute yellow everywhere. That's the intangible assets. It's not something you can like physically sell off unless you sell the company or you're marketing your brand. But because it's intangible, I don't like to count that when I'm looking at my total assets. And again, just so you guys know, stockholder equity is total assets minus total liabilities. All of your assets minus all your debts. So when you take out these two intangible assets of the goodwill, where you got a bad deal on Badoo, and you and you take out the intangible assets of like, oh, the Bumble brand is worth a lot of money, the stockholder equity starts to look very, very different. It goes from $2 billion positive to negative 1.2 billion, which means that for the year ended 2020, their total debts were greater than their total assets. Not good. 2019, that number was positive. Is a positive $28 million. So in reality, what we thought was a 6,900% gain was really a 4,500% loss in stockholder equity if you take out goodwill and other intangible assets. Pause. All right. So now that we've talked about that, the final thing we're going to talk about is the statement of cash flows. So cash flow generated from operating activity actually decreased by almost 50%. Their cash flow from financing activities actually increased by over 4,000%. And we're actually going to go here and look at it. So as you can see, $2.3 billion was generated from limited partners' interests. So this is the Blackstone Group, which is a company that owns a heavy stake in Bumble. They actually put in $2.2 billion to the company. So that's the majority of that. But I did want to call out that they raised some capital, and that's why that number is so high. And then finally, for the cash flow from investing activities, that was a major, major loss. And man, was it hard to find this number. Why was it negative $2.8 billion? I again went back to the original filing that Bumble showed. And so I was looking for this $2.8 billion, and here it is. So this is acquisition of business, net of cash acquired. So the only thing that I could think of is when Bumble, as we see it now, the parent company of both the Bumble app and the Badoo app, became a thing. It actually came from something called Magic Lab, which was the original parent company of Badoo and Bumble. So they switched it over, and the best I could try to ascertain is that when they put it over, counted the Badoo app transfer or something that was on the Magic Lab's books before onto this investing activity cash flow for Bumble. So that's what I think that number comes from. But at the end of the day, cash flows at the end of the period were positive, which is good. And so overall, looking at the numbers, what do I think? At $69 per share, probably a little too steep considering the revenue, the stockholder equity, the cash flows that we looked at. Bumble definitely has an opportunity in the market to expand its market share and to become the premier dating app, especially in a growing dating app market. Bumble definitely has revenue, but to be honest, I would look at the Match Group, look at Tinder before committing $69 per share to Bumble. It's more expensive, but I would want to understand that the numbers don't jump off the page initially as, oh my god, I gotta get in now because this company is in a great position for the long term. I would want to wait a little bit more, see how this company does. But that's just my personal opinion. I am not a financial advisor, just an aspiring Hokage. At the end of the day, I'm just going to give you the details. I'm going to tell you what I think, but it's really up to you to use your own judgment and see how you feel about the stock and if you think it's worth your money. So, without further ado, thank you so much for watching the video. If you liked it, please leave a like, please subscribe. You can follow my Instagram, it's Stock Deep Dive, where basically take all this and I condense it down to 3 posts. So even though you watch the full video, you want to recap, you can go on Instagram, you can look at it, especially if you're having a busy week. Anyway, thanks a lot, guys. See you next week.